Right, we'll get started. Okay, welcome everyone for joining in today's sharing. Okay, so today's topic here is gonna be how to develop a winning strategy. Okay, and I'm pretty sure throughout this entire sharing there will be questions that you feel like you'd like to clarify or you'd like to understand a bit more. Okay, we do have a Q&A section at the end of today's sharing session. So what I would urge is that for all of you to actually write down your questions so that you don't forget it, and then during the Q&A session is where we'll do more of an interactive session. Okay, so at the front part over here, I'll be spending more time to go through the materials that I've prepared for you. Okay, more on how to develop a winning strategy, and after that we'll go into Q&A. Right, so let's get started. Okay, and again, thank you guys for being here with me. Okay, so I always enjoy such sessions to share with you a bit more about what I know, my knowledge, okay, my experience, and hopefully through this process I'll be able to help you and benefit you in your trading as well. Okay, so firstly, just spend very short, about few minutes quickly to introduce myself. I think this is important, especially for those of you who are perhaps very new, have yet to hear any of my sharing before. I think it's important to at least get to know each other. Okay, so my name is Kar Yong. I started trading back in 2012, and since 2015, I've been very actively sharing my experience, my knowledge about trading and investing with fellow traders and investors, mainly in Southeast Asia. Okay, and these are just some of the photos you can see. But of course, since last year, 2020, we have been shifting more towards online, right? Something like this that you are actually participating and attending today. Okay, so I think it's also important to quickly show you some of my recent results, both from trading and investing, okay, because I would like to be as transparent as I can and to really showcase to you what is actual trading and investing. Okay, and whatever I'm sharing and showing you today, okay, all come from my practical experience, the journey I walked through in trading and investing the financial market, right? So these are definitely not theory. They are really based on things that I personally went through or even experienced. And hopefully, right, some of the lessons, the painful one that I'm going to share with you today, hopefully you won't commit to the same mistakes, right? You'll be able to avoid them. Okay, so this is my 2019 results on the FX market. Okay, and you can see obviously it's not gonna be every time sure win. Okay, there are ups and downs in the market. Okay, this is my 2020 last year result. Not as good as 2019. Okay, but I still end off the year in terms of FX portfolio at about 8.5%. Okay, there's obviously a challenging period in 2020. Okay, and this is 22-1, which is this year up to March, right? And of course, we are already end of the month. Okay, so more or less, that's the performance for March. Okay, so far so good for me this year, right? Has been positive since January. But let's see how it goes. Okay, so we still have this is just the first quarter, right? We still have 3 more quarters for 22-1. And of course, I'm also actively investing and trading the US stock market. Okay, so this is just a quick performance for the stock market portfolio. Okay, last year was fantastic. Okay, I did about 36.9% return. This year itself is up by 2.23 so far. Okay, seems like my March isn't just gonna be a good month. Okay, so last year March I was down about 1.5. This month here, this year here, March also down by about close to 1.5, right? Okay, but let's see how it goes. So far so good for the stock market as well. Okay, so very quickly I want to share with you all this is really to showcase to you that today's sharing, the content that I've prepared for you doesn't come from books, doesn't come from theory. Okay, they are very, very practical stuff that I've personally experienced trading and investing the actual financial market. Okay, so for those of you perhaps who maybe first time knowing me, like to connect with me beyond this sharing session, okay, feel free to add me on my Facebook page or even on Instagram, right? I do share actively on those social media as well. Okay, so that's a very quick one about myself. At least we get to know each other better. But I think the focus today is not about me, but it's really about you guys over here that you decided to actually take out 1 hour of your time to join this webinar. So I think it's very important that you take away value. Okay, so over here, my objective for today in this 1 hour, okay, is to share with you, number one, how you can combine the various technical indicators to help you formulate a strategy for yourself. Okay, over the past few weeks, or I would say a couple of months, we have been coming in more or less on a weekly basis to share with you guys various technical indicators, right? So today is a little bit more, we can see like how we put things together. Okay, and we'll share with you what are the elements that essentially contribute to a strategy, a winning one. Okay, and where many traders actually either miss out on certain important things or they overemphasize on some parts which are perhaps not so important. Okay, and of course, I'll share with you by the end of this webinar, you also figure out like what are some of the daily mistakes and pitfalls that you absolutely want to avoid. Okay, this is very important. Good. Okay, so let's go straight in by first understanding technical charts, right? So over here, in every chart that you pull out, right? Again, as long as it's a chart, doesn't matter what time frame, doesn't matter what instrument, it can be FX, it can be commodities, it can be stocks, okay? Doesn't really matter. As long as it's a technical chart, this is basically what it is, okay? You have two exits, right? You have the price data, and of course, you do have the time data, okay? Every chart have this, okay? And essentially what we have is that a lot of times we also look at candlesticks, right? So in terms of candlesticks, then we do have the open, high, low, and close prices, right? So of course, depending on which period you are looking at, every period, every time frame would have an open, high, low, and close. So if you're looking at the daily, then obviously it's going to be the starting price for the day, the high of the day, the low of the day, and then the closing price of the day, right? If today you're looking at, let's say, an hourly chart, then of course it's the open of that hour, high, low, and close, vice versa. Okay, so every technical chart would have this. Okay, and with that, okay, I want you to know that while technical indicators might sound, complicated, or it might sound, too fanciful, but if you really go back down to the simplest form of it, every technical indicators, basically they just extract data from all this information. Either is it price, is it time, is it the open, is it the high, is it the low, or is it the close? Okay, so in one way or another, every technical indicators can extract data from that. Okay, that's why we call it technical indicators, right? We take information from the chart itself. Okay, and of course every indicators have different formula, but essentially what are the data that they get is really your price, time, high, low, open, close. Okay, so some indicators then would then be a study of another indicator, right? So we call it the derivative of another indicator. Okay, so it's like, you take an indicator that study the price chart, and then after that you have another indicator that studies that indicator. Okay, so that's essentially what it is, right? I want you to have like the simplest understanding of technical indicators. Okay, and if I were to kind of like strip down all the complexity and go down to the true essence of it, okay, essentially why we as traders, when we look at technical charts, why do we have indicators, or why do we use indicators? Mainly is really just for this couple of reasons. Number one, we want to look for direction, right? So we look at the chart, we maybe want to use some indicators to tell us what is the probability moving forward. Is it going to go up? Is it going to go down? Is it going to go sideways? Okay, so we use indicators for the first reason is to look for a direction, okay, to tell us where is the higher probability direction. Okay, so that's the first reason why we use it. The second reason that we use technical indicators is, of course, to look for timing. Okay, when to get in, when to get out. Is now a good time to execute your trade? Basically, that is what we call timing. Okay, so there are certain set of indicators where we use to help us with timing the market. Okay, when to execute a trade. And the last one here essentially is to look for price interest. Okay, now price interest, what I mean is just basically where, okay, what specific price do we want to get involved, what specific price do we want to get out. Okay, that's what I mean by price interest. Okay, so really down to the essence, right? All indicators or any indicators that you use, at the end of the day, this is the reason that you want to get out of it. Okay, you either want some form of direction indication, or you want some form of like telling you when to get in, when to get out, or telling you where to get in. Okay, so today as a trader, okay, these are the three things that you need to get it right. Okay, you need to get the direction right, you need to get the timing right, you need to get the precision right, and with that, of course, you can make money. Okay, so I want you to understand this because you know, there are just so many indicators out there that you know, you might get confused, like which one should I use, right? Which one should I put together? Which one should I combine from a strategy? Right. So before you even reach that stage, I think it's very important that you understand why we use indicators. Okay, and these are the 3 reasons why we use it. Okay, so once you understand that, it becomes easier for you to kind of select. Okay, because you already know your end goal, what you want to achieve, and then what you do right now is just select the right tools, select the right indicators to help you achieve. Okay, so let me give you a much deeper understanding as to each of this end goal. Okay, the direction, the timing, and the price precision. Okay, so direction here again, as I just now mentioned, is that we basically want to know where is the higher probability direction. Is it up? Is it down? Is it sideways? Okay, and from there, as a trader, you need to know a direction. Because if today you want to trade, you need to know, like, are you having a bullish bias, bearish bias, or you say that now it's, you know, not clear, you do not want to trade. Okay, direction is very, very important. Okay, so over here, again, a lot of traders, whenever we look at the chart, we look at the market, we always say, should we buy or should we sell, or should we just hold, right? Stay away, right? So this is essentially the first question you need to answer for yourself, okay? And of course, there are certain technical indicators that can help us to tell us, or kind of hint to us, right? Whether is it higher probability, upside, downside, or sideways. Okay? So some of the common indicators here that, no, this is not extensive, this is not the only 3, but I'm just sharing you some very, very common ones so that you understand a little bit what I mean by it. Okay, so for example, moving average, your MA, SMA, EMA, basically they are moving averages. Okay, your MACD, your Ichimoku indicator, these are the indicators that kind of tell you the direction. Okay, so if today you utilize all these indicators, more or less, you are actually wanting to find out, is it an uptrend, downtrend, or sideways trend, right? So that's the idea of it. Okay, so you're using this to tell you the direction. Okay, now the second one is, of course, second reason here is you can use it for timing. Okay, so over here, basically the idea is we as traders, we want to know when is a better time to execute a trade, right? When to get in, when to get out. Okay, so do we enter now or later, or should we exit the trade now or earlier or later? Okay, so that's the idea of it. Okay, and some of the common indicators here again, these are not extensive, but the common one here includes like ADX, RSI, and Bollinger Bands. Okay, now some of you maybe have yet to hear of any indicators like this before, but no worries. Okay, you know, there are tons of information out there. I'll show you some sources. Some of our previous sharing session, I also talk about some of these indicators. Okay, don't be afraid that some of these are very foreign to you. Okay, you do not really need to know all the indicators out there. Okay, but of course, the more you know, the better it is. But again, to be a trader, you do not need to know every indicator. Okay, so these are the common ones. RSI, ADX, Bollinger Bands basically tells you the timing element. Okay, it has a certain element in telling you when to get in, when to get out. Okay, and the last one here we are talking about is price interest. Okay, the precision level as to, or area as to where you want to be focused and get involved in the trade. Okay, so you have okay, the idea here is, of course, you have your pivot points, you have your fractals, and of course Fibonacci ratios as well. Okay, this is considered one of the I would say indicator, though it's more like a tool, right? It's a tool. But Fibonacci ratios also help us to pinpoint like exactly which area do you want to focus. All right, so that's the gist of it. Okay, so over here, if I want to, you know, kind of like sum up a little bit in this portion of this sharing, okay, I also want you to know that some indicators can be used for more than one purpose. Okay, so if today you understand Ichimoku, okay, you know that it's really more or less a complete set of indicator within itself. Okay, because Ichimoku, essentially inside it, you have like 4 different indicators build up the Ichimoku indicator. Right? So some indicators can be used for more than one purpose. Okay, so for example, like moving average, MA in short, right, can be used for direction. Of course, if MA is sloping up, right, you can use crossover, for example, okay, and that gives you the direction. And of course, some of you trade like MA pullback, right? So if price pull back to the MA, it acts like a support, then that can also be the price interest, right? To know when you want to enter, which price to pay attention to. Okay. Another example is BB band, which is Bollinger Band, and of course KC Kettler Channel. Okay, so this two indicator again can be used for timing, okay, and price interest, right? Again, if Bollinger Band starts to squeeze, telling you to look for a breakout, okay, or if you're using KC, for example, you can look for the outer band and then the middle line, okay, so that's where you can play around with mean reversion, okay. Every time price hits the outer band, there's a high chance it will come back in the middle, okay. So again, these are just example of how one indicator you can use it for more purpose. Okay, so why I want to really share with you this, because I believe that a lot of times you might not find this information out there, right? And many traders or even trainer might not be able to share with you this. Okay, maybe that will confuse you. Okay, but the idea I feel is that it's so important to always go down to the essence of it, so that it becomes simple. Once you understand like the essence, the element within it, okay, things becomes so much easy to understand. Okay, so the idea here is once you know this, right, you will start to realize that you really do not need, or actually what I would say is you do not want to have too many indicators on your chart. Okay, because if today you know your end goal here is to have that three objective: direction, timing, and precision level, right, price interest, then you do not need a lot of indicators, right? Because as long as you have certain tools, certain indicators to help you achieve these three things, that's all you really need, right? So having two or more indicators with the same purpose also defeat the purpose itself. Okay, so for example, okay, if today you put like a Bollinger Band onto your chart and then you put KC channel into your chart, doesn't make sense, because these two indicators kind of tell you or have the same purpose, same objective, right? So it makes it a little bit more confusing, it makes it more complicated, right? It defeats the whole purpose, right? So same thing here, you do not want to have like RSI and stochastic together, because these two indicators pretty much tell you the same thing, right? It's a timing indicator, right? So if you put them together, then confuse you, because what happens if like one tells you one thing, the other tells you another, things just get overcomplicated. Okay, and same thing just now I mentioned, you do not want to have BB and KC together, right? And the idea here is knowing this final outcome or objective that you want to achieve. Okay, at the end of the day, you want to keep your chart clean and simple, right? So over here, again, we have done this indicator series for the past couple of weeks or even months, right? I think it's about 2 to 3 months ish. Hey, every of this video here, the recording is actually up on YouTube. You'll be able to review it. Okay, if let's say there's any specific indicator you'd like to find out a little bit more. Okay, for Fibonacci, I did this sometime back as well, late last year, right? I break it down into a 4-part series. So again, it's on YouTube. You'll be able to find it, and hopefully it'll be able to give you better insights on this. Okay. So again, today's objective is not to really go down into every indicator. Okay. We did that in the past. Okay. So just go and watch those recordings if any of these indicators are of your interest. Okay. But today here is more towards putting them together and giving you the big picture. Okay. So for me, okay, so I get this a lot, right? People ask me like, so which indicator should I use, or which indicator do I use? Okay. So over here, let me share with you. Okay. Again, looking back at the framework, right, you just need direction, timing, precision level, right, price interest. So for me, I use chart patterns more, okay, for the direction and timing. Okay, so what are chart patterns? For example, double top, double bottom, head and shoulder, wedge, okay, diagonal, flag. Okay, those are chart patterns. Okay, now they are, I wouldn't put them as indicator, okay, but they are just basically patterns that you look at the chart and then you start to recognize them, because they tend to repeat itself over and over. Okay, so I use those for my direction and timing. Okay, so chart pattern also has a certain element of timing, because when the pattern completes, okay, then that's where it's the time to execute the trade. Okay, direction is there because if you see a double top, okay, then you know there's a very high chance it will come down. If you see a double bottom, then you know very high chance it will go up, right? So there's a direction element. Okay, so I don't use indicator for direction. I use chart pattern for direction. Right? Now I also use RSI, okay, though very seldom. Okay, but the one indicator that I really use really for RSI, okay, is for timing. Okay, so what I use the RSI for is really on divergence. Okay, whether the momentum is still there, is there a confirmation of a reversal? Okay, I use it for the principle and concept of divergence. Okay, now if you'd like to understand a bit more about divergence, go watch the RSI indicator video. Okay, inside we talk about hidden divergence, we talk about regular divergence, okay, and how to use it. Okay, so I use that indicator for timing, okay, for the reversal idea, right? And for me, I also do both style of trading. Okay, so over here you see is intraday. Intraday basically means short-term trading. The trade usually lasts for a day or two, and then that's it. We get out, okay, and then we look for another opportunity. We get in again, and just repeat the whole process. Okay, so intraday is short-term. Okay, and I use pivot points for my price interest, right? Again, where is support, where is resistance, where do I get in, where do I get out, where do I put my take profit, where do I put my stop loss? Okay, I use pivot points for intraday trading. Okay, so that's the indicator that I use. If I'm looking for bigger move, right? So we call this swing trading. Okay, swing trading, the idea here is you can enter a position and you can hold it for a couple of days or even weeks. Okay, so for me, when I'm doing swing trading, I use a lot of Fibonacci ratios for price interest, right? Where to get in, where should I put my stop, where to put my target. I use Fibonacci a lot. Okay, and of course, Fibonacci is again a broad topic. We have the entire series uploaded, right? Again, all this information are free, right? I'm doing my very best to give you as much information and knowledge, and of course, ideally to help you in your journey as well, right? So Fibonacci, again, it breaks it down into like retracement, extension, expansion. There are 3 families in it. Okay, so I use a lot of this to help me identify price interest. Okay, so these are really all the tools that I use, right? You realize that I don't use MA, I don't use Bollinger Band, I don't use ADX, I don't use Ichimoku, etc., etc. Okay, but does not mean that they don't work. Okay, it doesn't mean that they are not good. Okay, it doesn't mean that it's lousy. It's just that it doesn't fit me. Okay, for me, I'm not aligned with those indicators. I personally don't feel like I like them. Okay, and that's the reason I don't use. Okay, but I know traders who are using them to make money as well. Okay, so you realize that it's very clean and simple, right? All I need is a direction, a timing, and the price interest. Okay, and I don't want to overcomplicate my chart. Okay, so you realize that I just need 1 or 2 specific indicator to help me achieve that. Okay, so that's the idea behind it. Yeah, so I want you to know this as well. I think I've said this a couple of times. Okay, there is no such thing as like the best indicator. Okay, I think some of you perhaps are new in trading, might still have that thought process of like, Kar Yong, what is the best indicator, or which indicator is best suited for beginners? Okay, now we'll talk about that later part, right, as one of the common mistakes that many traders actually fall prey to. Okay, but I want you to know there's no such thing. Okay, there's no such thing as like, oh, if you're new to trading, then use this indicator. If you're advanced in trading, then use this indicator. No, okay. I've seen traders who have like 20 years of experience, they're still using MA. Okay, I've seen traders who just got started and they are very aligned with moving average. Okay, so again, no such thing as like best indicator. Okay, but there is the idea of like which indicator actually suits you. Okay, and the whole process of finding out and discovering it comes back to you definitely need to put in some time to go and explore, right? So same thing over here, there's no such thing or best strategy as well, right? So the idea again, as I mentioned, you need to experience and find out for yourself, okay, which technique, which indicator, which style you are aligned with. Okay, so this is very important, okay? So I want to give you some context and comparison, right? So let's say we take into account like martial arts, okay? Basically self-defense, arts, okay? So the idea here is we have a lot, right? I'm just listing some of it here. You have your karate, Muay Thai, Taekwondo, boxing, Jiu-Jitsu, Judo, Krav Maga, kickboxing, wrestling, Wing Chun, Aikido, okay? Then, same thing, right? In trading, you have so many different styles. Okay, so many different indicators. So I want you to do that comparison with martial arts. And let's say today you want to go and learn self-defense. You want to learn martial arts, right? Naturally, this question will pop up, right? You ask like, oh, okay, so which martial art should I learn? okay, I'll probably want to learn like the best, right? The world best martial art, okay? And of course, depending on the culture, depending on your experience in martial arts, we all have different answer. Honestly, is there really such thing called the best martial arts? I don't think so, okay? Because at the end of the day, okay, each of them have their strength and weaknesses. Okay, so if you take a look at this, right? Let's say we talk about maybe, I don't know, taekwondo, okay? Taekwondo, we use a lot of legs, okay? And boxing, right? We use a lot of just our hands and punches, okay? So obviously there's strength or weaknesses, right? Because if you are looking at taekwondo, if you use your legs, you have a further reach. Okay, if you're boxing, you have a limited reach because of your arm, right? Your arm length. But at the same time, taekwondo, because maybe you are using your leg a lot, okay, and when you kick, okay, you only need to stand on one, and then maybe the balancing and maybe the agility is not as fast and agile as like a boxer, okay? So each of it has its strength and weaknesses. I want you to see that, right? So this also applies in trading, in the style, the strategy, the technical analysis. They do have their own individual strength and weakness. Okay, so over here, I'll touch a little bit more into this conversation here. Okay, but I want to introduce to you this first, right? Instead of searching for the best strategy, for the best indicator, for the best style of trading, I want you to start shifting towards like focus on being the best. Okay, so we'll dive a little bit deeper into this conversation, but for now, I'll leave it for food for thoughts. Okay, now the idea of this is, I want you to think about it, right? Someone, let's say you just do a comparison, right? Someone who focus on being the best karate out there versus someone who is jumping around different martial arts trying to figure out which is the best. Okay, and when these two person comes together and compete, right, or even fight, okay, who do you think will win? The person who kind of like explore all different martial arts, who knows a little bit of everything, or the person who have practiced and wanting to be the best karate out there? Okay, I think we all know the answer, right? So same concept apply to trading. Right? You do not want to keep searching, but instead you want to start focusing on being the best. So, of course, at the early stage is an exploratory one, right? Where you want to discover which one fits you. But as you progress, eventually, okay, you want to focus, okay, being the best, whatever trader you are. Okay, so with that clear off, okay, the next phase over here is then, some of the question is, so Kar Yong, what makes a winning strategy? Okay, now we understand there's no best strategy, but then how do I evaluate a strategy? How do I know if this strategy is a good one, right? How do I know it's a winning one? Okay, so there are some elements to it, right? But let me share with you quickly what are some of the misconceptions that many traders have when they think about strategy, when they think about a winning one. Okay, so the first one is I always hear this, okay? People say, or people question, okay, so what is the hit rate? What is your win rate? What's the accuracy of your strategy? Okay. Whenever I hear a trader ask me that question, or in a conversation when there are traders asking this question, most of the time, okay, if you are still asking this question, you are still very new into trading. Okay, in terms of like journey, right? If there's an end goal of like consistently being profitable in trading, okay, if you're still asking about win rate, accuracy, things like that, you're still at the very early stage because you haven't fully understand the whole picture of trading. Okay? Now, this is a common misconception. Now, it's not a bad thing, but you need to be aware that you do not need to have a high accuracy to be profitable. Okay? Because a lot of people think, well, if today you have like 80% win rate, oh, it's a winning strategy. Okay? It might not be. Okay? Or even, you have, let's say right now you have a 60% strategy and then you are trying so hard to kind of like make it into a 90% winning strategy. Okay, again, you do not need that. Right, so this is the first misconception that I think is super important that all of you get it. Okay, the second one here is that, a lot of times I hear people ask me also, right? So if let's say they ask like, what is your win rate? Okay, so if let's say you say I have an 80% win rate, okay, naturally then the follow-up question is, oh, so if you have so high probability win rate, right? Why are you trading so small? Okay, doesn't make sense, right? Why don't you go bigger and then you can make more money? Okay, now this is again a misconception, right? Because you when you actually say that, you do not have a full picture, you do not have a full understanding of what probability really means. Okay? And of course today I'll share with you, okay, so that you get a full picture and understanding, so that you don't commit to all this misconception, right? And you actually help you to progress in your trading journey, right? Move forward. Okay. And of course, this is also another misconception over here. A lot of traders think that, oh, if I'm a trader means every day I got to trade. Okay, if I'm not trading, then I'm slacking, I'm not doing work, and then that's a bad thing. Okay, no, okay. We are trained in society to have that perception, like if today you go to work and then you slack, it's a bad thing, right? But in trading or even in investing, okay, sometimes doing nothing is a conscious decision, okay, and it's better off for your trading, okay. So I want you to know that being a trader doesn't mean that you need to execute trades every day, okay. And I'll show you some practical case study from my own trading journey, right? So these are not something that I just say, okay. I want to show you and prove to you that these are principles that I personally apply to as well, right? And show you that these are all just misconception over here. Okay, so now let's go into deeper understanding of what is win rate. Okay, so today, if when I say, let's say this strategy have a 60% win rate, okay, what most people would probably have in their mind that, oh, 60%, okay, so that means that if I take 10 trades, I'll win 6, I'll lose 4. Okay, I think many of you who are listening here or with us right now are probably thinking about that. Okay, now that's correct. Okay, that's 60%, right? But think about it. 10 trades. Okay, the sample size is just too small. Okay, now if I give you an idea, right? Trading is actually not like that, right? If I give you this idea here, okay. Now let's say you go and flip a coin, right? So obviously I have a link over here, but we'll not click into it. But I want you to just imagine, okay, today you take a coin, you flip it 10 times, okay? Or before you flip it, okay, let me ask you, what's the probability of getting a hit? Or what is the probability of getting a tail? Likely your answer will be 50-50, right? If it's not hit, then it will be tail. So it's a 50-50 probability, okay? So does it mean that if today you have a 50% probability, you flip 10 times, you're gonna get 5 hits, 5 tails? Unlikely, okay? Very, very unlikely. If you don't believe me, you just do a try, right? After this webinar, right? Not now. Okay, after this webinar, you just go and flip 10 times, right? You're probably not gonna get 5 hit, 5 tails. You're probably gonna get maybe 6 hit, 4 tails. Sometimes you might even get like 7 hit, 3 tails, and vice versa. Okay, but does that mean the probability of getting a hit is no longer 50%? No, it's still 50%, right? So over here, I want you to see that each trade outcome essentially will be random and independent by itself. Okay, just like flipping a coin, right? Every flip is still independent, it's 50%. But if your sample size is too small, you're not likely going to see a 50%. Okay, so in trading, okay, if today you are only basing your trade sample size of 10 trades, that's not enough. Okay, you need to put together a large enough sample size so that it becomes closer towards probability that we are talking about. Okay, so in terms of trading, at least give it about like 20 to 30 trades minimum, okay, to at least have a rough feel of what the probability is, right? 5 trades, 10 trades, just too little. Okay, so I hope you get that idea. Okay, now again, what does win rate means, right? Win rate is not everything. Okay? A lot of traders think that, oh, accuracy is like the most important part of a strategy. No, okay. Now we talk about profitability. Okay, so win rate is just one small element of the entire equation. Okay, and the other aspect here that many traders don't really focus and talk about is what we call risk reward ratio, RR in short. Okay, now you need to have both of this coming together to actually have a better measurement of what we call profitability. Okay, so profitability is basically whether you're gonna make money, right? That's what it means. Okay, in trading terms, we have a term to it. We call it expectancy. Okay, so over here, that's the equation. Okay, profitability or expectancy is equivalent to like your percentage of win, which is your win rate, multiplied by your average win. Okay, minus off, of course, the percentage of losing and the average losses. Okay, so the average win size and the average loss size is essentially your risk to reward ratio. Right, so these two are part of the equation. You cannot only just look at win rate. Okay, so let me give you an understanding of expectancy over here, right? So this is the equation. Now, let's suppose that today you have a win rate of 60%. Not too bad, right? It's already more than 50. Okay, so probability is at your advantage. Okay, now let's say the average win is $100. Okay, so some trade, of course, you win more, some trades you win less, but average you win about $100 every trade that you win. Okay, and your average loss is about $80. Okay, so if you just put this into risk to reward, right? You're making $100 for a risk of $80. Okay, so this is just like about 1:1, right? Slightly beyond 1:1. Okay, now if you put this into the equation, okay, 0.6, which is 60% times 100 minus off the 40% times $80, that essentially brings our expectancy to $28. Okay, so what does this mean is that if you have this kind of statistics, it tells you that every time you take a trade, you have the expectancy, your probability of winning is about $28. Okay, so that's what we mean by profitability. So if it's a positive number for expectancy, means your strategy is a winning strategy. Okay, doesn't matter your win rate, because if your expectancy turns out to be positive, you have a winning strategy. That's it. That's all. Simple as that, right? So now let me give you more example, right? Over time, each trade is expected to make about $28 on average. So it's a profitable strategy, right? It's a winning strategy. Okay. Now, then the question is that if we increase our win rate to 80%, does it mean that we're gonna make more? Okay. Not necessary. Let me show you the equation, right? So if today our win rate becomes 80-20, but of course, because if we want to win more, okay, we might not be able to hit like huge wins, right? Sometimes we just take profit fast, right? That's why our accuracy can increase. So now our average win actually dropped to $50, and let's say the average loss is still 80. Okay, so you realize right now that you're actually losing on average more than winning. Okay, so it's not a good sign, right? But let's plug it into the equation, and you still get a positive expectancy of $24. Okay, so what it means is that over time, each trade is expected to make about $24. So it's still positive. Okay, you still have a winning strategy. Okay, but you realize that this is different from the previous example. The previous one was $28, right? This was 24, so it's slightly lower. So win rate is not everything. Okay, and let me give you another example. Can an 80% win rate be a losing strategy? It can be, right? If again today your average win drops to like 20 and your average loss is $100, okay, which means that you basically don't control your loss. And every time you see a small win, you just take it. You see a small win, you just take it, right? And you plug it into the equation, you get a -4. Okay, -4 means over time, every trade you're expected to lose about $4. So it's a losing strategy. Okay, you're not gonna make money, right? Because if you use this strategy and you trade over a period of time, you bleed out. Okay, you lose money, right? So again, win rate is not everything. That's the message I want to send across to you guys. The more important thing is to understand profitability, understand what is expectancy. Okay, and again, in the equation, win rate is important, but you need to also understand risk to reward ratio, your RR ratio. Okay, so over here, let me, give you a much better understanding when we put it into practical examples, right? So win rate is not everything. Okay, win rate does not mean anything in the short run. Again, you need to have a large enough sample size. Okay, and of course, we talk about how you focus on expectancy instead, right? Profitability, win rate plus your risk to reward ratio. Okay, so over here, I want to use an account that we just started this year, January 2021. Okay, this account here, I use it for short-term intraday trading. Okay, again, I want to show you real-life case studies of all these statistics, all these principles that we talk about. Okay, so over here you can see these are screenshots taken from my FX book, right? So you can see over here we took a total of 36 trades. Okay, so we won 25 out of 36 and we lost 11 out of 36. Okay, so if you put that into percentage, Okay, we win about 69% and we lose about 31%. Okay, which means that the win rate is close to 70%. Okay, now to me, a 70% accuracy strategy is good. Okay, you do not need 80, you do not need 90. Okay, in fact, somewhere between 60 to 70%, I would say that's a pretty solid win rate. Okay, so don't have that conception or the idea that you need to have 100%. No, you don't. Okay, so about 60 to 70%, very good. Right, now over here we talk about expectancy, right? So my FX book actually tracks this as well. Okay, so you can see my expectancy for this strategy here is about plus 3 pips. Okay, now it's a small figure because it's an intraday trade. Okay, we are looking for like about average of maybe about 20 plus to 30 pips profit, sometimes of course 50. Okay, and if our loss is more or less close to 1:1, right? So you realize that the expectancy here is 3 pips. So what does this mean? It means that over time, if I keep executing this strategy, every trade that I'll take, I'll expect to make 3 pips. Okay, not a lot, but from an intraday perspective, it's a positive number, right? Means this strategy here is winning. Okay, is returning you profits. Okay, now so this is what we mean by trade. Okay, let's go deeper. Okay, so again, I want you to see this is starting from Jan this year. Okay, somewhere around mid-Jan until right now, day, right, which is end of March. Okay, so it's about 3 months. Okay, this account grew by about 4% with a drawdown of 5.5. Okay, so for those of you who do not understand what drawdown means, is basically when your account starts losing, how much did it drop. Okay, so this account dropped by about 5.5. Very, very acceptable, right? A lot of people can accept a 5% drawdown. Okay, so again, I want you to see it's not always about winning. Okay, in trading, your journey, there will be wins, there will be loss, right? So if you take a look at the equity curve, there's up and downs, right? Up means you make money, down, of course, right? So for up to now, 3 months, we made about 4.15. That's an average of about 1.8 per month. Okay, not too bad, right? Not too bad. With a certain controlled risk as well, right? And again, why I want to show you this is, number one, the lesson here is you do not need a high win rate to be profitable. Okay, what's my win rate on this strategy? 69%. Can you make money? Yes. Okay, this account is making about 4% so far up to 3 months. Okay, so that's the first lesson. Now, next is, okay, so people will ask, so you have a winning strategy, right? Why not go big? Why you only make so little? Okay, why only 4%? Why don't you like double up and then you'll be able to make like 8%? Okay, so I want you to see here that again, a winning strategy doesn't mean you don't have losing months. Okay, doesn't mean you don't have losing trades. Okay, over here in February, we are down by about close to 5% on this strategy, on this account. Okay, and the idea here again is there will be losing trade. Okay, and that's why you understand that, you know that, you don't go big. Even if I have like a 70% win rate, I don't want to go big, because if today I go big, what happens in February? I could have lost 10%, I could have lost 20%. Okay, or if I don't control it, I go really, really, really big, I could have lost the entire account, right? So that's the idea behind why, even if today I have like 70% win rate, I'm confident in the strategy, I still don't go big. Okay, that's the part where I want you to understand. Okay, and then of course, a lot of questions people will ask is that, so do I need to look at a lot of instrument? Do I need to trade a lot in order for you to be profitable? Okay, again, take a look at this here. I trade only 5 pairs in this account. Again, this is intraday, so we only focus on the major currency, right? So lesson here again, you do not need to trade a lot of instrument. This account that I'm trading, 5 currency pairs only, 5 majors, okay, and sufficient, right? So you don't, again, it's a misconception that people think that you need to trade a lot. Okay, you need to have a lot of instruments. No, you don't need. Okay, so I hope this kind of live examples, live case studies actually bring that message across. Okay, it's not theory, it's really things that I'm practicing. Okay, now again, I want you to see, right? This account started in January until now is end of March. So you have January, February, March, 3 months. Okay, the total trades that we have taken since then until now is about 36 trades. It's not about, it's 36 trades. Okay, So it's a very good number. Okay, if you divide that by 3 months, on average, it's about 12 trades a month. 4 weeks in a month, so we divide that by 4, we get about 3 trades per week. Okay, and of course, you know that we have Monday, Tuesday, Wednesday, Thursday, Friday that we can trade. So 5 days that we can trade in a week. But over here, based on this average statistics, we are only taking on average 3 trades a week. Okay, so what does this mean? It means every week there are 2 days I'm slacking, right? Okay, so I'm not taking trades every day. And of course, there will be weeks that maybe we only take 1 trade. There will be weeks that we can take 5 trades. Okay, so that average out about 3 trades per week. Okay, so what's the lesson? The message here is you do not need to have trades every day to make money. Okay, and of course over here you want to focus on profiting from the activity of trading instead of focusing on the action of trading, right? So a lot of traders, when they first jump into this market, they come into trading, they get excited. Why? They enjoy the activity of trading, okay? But essentially, at the end of the day, what you want to focus on is being a profitable one instead of like a busy and keep trading one, right? Because at the end of the day, you want to make money, right? Losing is not fun, okay? So you want to focus on the profiting of trades, okay, instead of the excitement and the action of executing trade. Okay, so that's the difference, right? I hope you get it. Okay, so message: you do not need to have a lot of trades, or you do not need to trade every day profitable. Okay, so I hope the message is sent across, right, with this case studies over here. Yeah. So with that, let's talk about some of the daily mistakes and pitfalls that you absolutely want to avoid as a trader. Okay, and I think this is very important, especially if today you are new or you're still, somewhere in your journey to become a trader. Okay, this is definitely going to help you. Okay, first, okay, this is again very, very common mistakes. Okay, searching for the Holy Grail. Okay, and I think there's no such thing, right? This doesn't exist out there. Okay, each strategy, as I mentioned, has its strengths and weaknesses. Okay, what you want as a trader is to go and find out. Okay, it's a process of discovery. You want to find out a strategy that is going to be aligned with you. Okay, and this whole process here is where you learn and you're going to apply a lot of different strategy. But at the end of the day, you're going to kind of like combine here and there, mix and match a little bit here and there, and then from there, you have your own version of it. Okay, now I've been coaching quite a bit of traders, right? I would say close to maybe hundreds or even close to thousands of traders across Southeast Asia, okay, for the past few years. And of course, when I'm coaching, I will need to share a strategy that I'm using. Okay, but I always share with the students that you do not want to just copy and paste directly, okay? What you can do is, now that I presented to you this strategy, okay, it's a shortcut for you because you have a complete set, right? But this complete set here does not mean that it's gonna fit you fully, 100%, right? You might need to fine tune a little bit, maybe tweak here a little bit, take a little bit out, add in a little bit of your element, and then that becomes yours. Okay, so that is a process of trading. Okay, you need to eventually do that. Okay, so instead of searching, just now we talked about this, right? And I say we want to dive a little bit deeper over here. Instead of searching, I want you to focus on becoming a trader. Okay, so here's the difference. Okay, you might not see, or you might start to ask like, so what's the difference, right? Kar Yong, what do you mean by searching? What do you mean by becoming? Okay, your mindset and the type of question that you ask determine whether you are still searching or determine whether you are becoming. Okay, so give you an example, right? Very, very subtle, but I think by showing you this difference, you get what I mean. Okay, so today, if you're still asking what strategy is the best, what strategy should I be using, what indicator should I be using, what chart, what instrument should I be trading, okay, basically this type of questions are searching questions. Okay, now nothing wrong about it. If today you are very new to trading, of course you need to search for it first, right? Then only you can explore. Nothing wrong about it, but eventually you want to progress and move from searching to becoming. So what's the type of question? The type of question is more like, how can I improve as a trader? Okay, so now you realize that there's a subtle difference between this, right? Because one is you are literally asking what strategy. The other is more like, how can I work on it? How can I improve? Okay, the end goal can be the same, which means that what strategy is the best? Essentially, what you want is a strategy. how can I improve as a trader? At the end of the day, what you want, the end product, is also a strategy that maybe makes money, right? But you realize that the mindset, when you ask the question differently, you are positioning yourself very differently. Okay, so I want you to see that, and eventually all of you will be moving from searching to becoming. Okay, that's very important, because if you never transit to becoming in the state of it, you're always stuck in that phase, right? So you need to transit over to becoming a trader, right? Focus on the state of becoming. Okay, so this path here again, while I'm sharing here, it sounds easy. Okay, I acknowledge that it's not so straightforward. Okay, it's not as easy as it sounds. Okay, but the first part here is I want you to be aware. Okay, because once you are aware, you'll be able to work on it. Okay, so the path as a trader is both constantly learning and discovering, right? Or even I would say a rediscovery of it. Okay, so it's definitely a journey. Okay, it's definitely a journey. Now, second, mistakes are what we call overconfidence. Okay, that's where you get a bit too cocky and you start to think that you know it all. Right. Now, what I can do is every time I share, I coach, I do it by what I know. Okay, but at the same time, I want you to know that I don't know everything out there. Okay, I only can share what I know, what I've experienced. Okay, so as a trader, you want to always have that acknowledgement that you do not know everything. Okay, because the market is just too complex, right? So you do not want to get overconfidence. Okay, so when you're overconfident, you tend to forget or even ignore risk management. Okay, and then that's where you start to say that I'm like winning, right? I have like a solid strategy, let's go big. Okay, and then likely what's gonna happen is you bust your account. Okay, so don't do that. So too greedy, not having risk management in place, that's actually a result of overconfidence. Okay, so always be aware, never get too cocky, right? So over here, I want you to understand, just now we talked about this concept called drawdown, right? Why, even if today you have like a winning strategy, why you don't trade big? It's because if today you trade big and so happen the probability is not working on your in your favor, what will happen is you experience losses, you experience drawdown. Okay, and the bigger your drawdown is, the more difficult it is for you to actually recover from your loss. Okay, give you an example. If today you suffer a 10% drawdown, is fairly manageable because all you really need is just an 11% profit to recover your loss. Okay, you do the math. Okay, that's about it. Now, if today you suffer a 50% drawdown, which means you lose half of your account, you need to actually double whatever you have left just to recover back. Okay, so if you have a 50% drawdown, you need to double your account in order to go back to where your original equity was. Okay, so that's actually very challenging. You need to double your account, right? 100%. So the idea here again is focus on consistent wins instead of individual big wins. Right? So instead of focusing like I want to get the next 10x multi-bagger trade, rather than that, or obviously if you can catch it is good. Okay, but what you want to then focus most of the time is consistent wins, right? Because that's the important part of trading. Yeah, so again, it's a mindset shift over here, right? I hope you understand all that. Okay, third aspect here is getting too emotionally attached to your trades. Okay, now I figured that a lot of traders actually commit to this mistake. Okay, so what I mean by that is that they want to become a trader. So usually you ask them why. Okay, they say that because I can make some good money from it. Okay, and actually behind subconsciously what they're thinking is, if I become a trader, okay, all my finances will be soft. Okay, so and that becomes like trading becomes a quick fix to their financial challenges, right? If you are having that, if you come into the market having that in mind, okay, you're basically too emotionally attached to it. Okay, because you have that struggle that you're experiencing, and then you attach it to trading being your solution. Okay, so that is what I mean by emotionally attached. Okay? Or let's say you are thinking about coming in, I'll be able to become a millionaire, get rich quick solution. Same thing. Okay, you are emotionally attached to it. Okay, now if this is happening to you, if you have this subconscious thought, okay, that's where you will often realize that your journey of trading is not gonna be, smooth. Okay, you're gonna be emotional a lot of time because psychologically, okay, whenever you lose trade, okay, you feel that, oh, you are further away from it, right, from the solution. And then when you win, you feel that, whoa, you're very excited, you get very close to it. And then when you lose, you get very far, right? So this, go like pull and push factor, psychologically, emotionally, not gonna help you, right? And over here, I want you to have the understanding that trading is both an art and a science. Okay. Now, a lot of times people focus on the science component, right, which is the sexy part, lah. Okay, the analysis, the technical charts, the research, the charting, the drawing. Those are all science. Okay, and I say that science is easy to learn, right? Because our brain is programmed to do that since young, right? We learn math, we learn science, easy. Okay, but the psychology, the emotion, the part where you need to understand yourself, discover yourself, align yourself to the strategy, to the style of trading, that's an art. Okay, and again, that's the difficult part that many people don't touch on. Okay, and I feel that it's important to emphasize on it. Okay, so if today you want to master trading, okay, or even investing, okay, you need to start to detach yourself from your emotions, okay, in order for you to really master the art of trading. Okay, the science is easy. You just need to study a little bit, practice, you get a hang of it. The challenging part, the difficult part is definitely the art element of it. Okay, so I hope it helps. Yeah. Now, last part here, knowing too little before we go into Q&A. Okay. So first off, I want you to know that trading or investing, it's a profession. Okay, so what's a profession? Think about it. It's like being a doctor, being a lawyer, being an engineer, being a chef. Okay, those are profession. Okay, it is a potential career path. So I want you to put being a trader, being an investor is just like being a lawyer, being a chef, being an engineer, being a professional sportsman. Okay. Now the difference here is, of course, you can study law in school, you can study engineering in school, but school doesn't really teach us about financial market. Okay, that's the difference. Okay, the difference here, it becomes you need to self-study. Okay, but don't look down on it. Okay, because far too many people, I would say that, they think that it's so easy. They're eager to jump in, right? They're very excited to jump into this, but they are actually not ready. And when I mean not ready, means either they are psychologically, emotionally not ready, mentally, their mindset, they're not ready. Okay, because they come in thinking it's a get rich quick, right? Definitely you are not ready if you are thinking of a get rich quick solution. Okay, so I want you to know that if today you're not prepared to put in the work, okay, on yourself to become a trader, okay, I would always encourage that you might want to take it slow. Okay, and maybe it might not be the right time for you to come into the market. Because if today you know a little bit, but you don't know sufficiently, okay, and that's what I call knowing too little. Okay, you know a bit, but not enough. That's where you are very prone to falling prey to scams. Now, if today you know zero, you have no idea what is the financial market, you're okay. Because if today you have zero knowledge about something, what will happen? You probably say that, I don't know, right? Then you brush it aside. Okay, but if today you know a little bit, but you don't know enough, you are in the most vulnerable phase. Okay, but anyway, I think if today you're here with us, okay, you're likely already knowing a little. Okay, so from there, I think it's important then keep building onto it. Okay, and start getting yourself more and more informed, more and more knowledge. Okay, so that's very important. Yeah, so I hope it helps. Okay, so if you ask me, I think that the world of financial markets, trading and investing is 100% worth it. Okay, and if you ask me, I think everyone should know how to trade and invest. I strongly believe in that. Okay, but I need to also acknowledge that it's more of, everyone should, but not everyone is ready. Okay, so the question here is more of not whether you should trade or invest or not, because it's yes, right? The answer to that is yes. But the question is more of, are you ready to make it work for yourself? Okay, if that you feel that it's not sure, okay, then you might want to take it slow. Okay, which means that maybe you're not psychologically prepared yet. Okay, So that's something that I want you to be aware, okay, and I want you to be honest to yourself, obviously, okay. Okay, so to sum up a little bit, then we go into Q&A, right? So over here, the idea is trading is actually a very simple process. Okay, especially if today I break it down for you, I hope you can see it's really just simple, right? But not easy. Okay, it's simple but not easy. Okay, trading is both an art and a science. Okay, you need to master both components to become a trader. Okay, and of course this is very important. Okay, focus on becoming instead of searching. Okay, so the idea is start off searching, but eventually you want to transit yourself into becoming a trader instead of searching, okay, for ways, like strategies and things. Okay, so I hope it helps. All right, so far so good. Okay, for those of you who like to just understand a little bit more, I don't really do a lot of teaching right now. Okay, but we do have some recorded lessons. Okay, if you are ready, you want to find out more, just head over to the website, tradingpillars.com. Right, that's about it. All informations are up there. You'll be able to find out a little bit. Okay, so with that, let's open up. Okay, I think I overrun quite a bit. Okay, but I would like to open up maybe for the next 10 to 15 minutes for Q&A. Okay, and see if you guys have any questions. I think now is a very good time. Again, I always enjoy Q&A session because I want to help you as best as I can. Okay, and I'm pretty sure you guys would have questions. Okay, so if you have questions right now, I think you can type it into chat box. Okay, I'll be able to monitor them and of course from there answer your question. Right, so okay, I'll give you a couple of minutes. Okay, usually there will be questions. Okay, usually I say if there's no questions, only mean two things, right? One is my presentation is like perfect, okay, which I don't think it is. Okay, I still have room to improve on, or okay, you probably lost, okay, for the entire presentation, no idea what I'm talking about. Okay, it's very bad. Okay. So yeah, we'll give it maybe a couple of minutes and see if you guys have any questions. If not, okay, then really that's really the end of presentation that I prepared. Right, so give it a few minutes and see if you guys have any questions. Type it into the chat box. Okay, I'll be able to see if you guys have any. All good? Okay, any questions? Means you guys are okay. Okay, so in that case, I really hope today's sharing is beneficial, able to provide to you guys some value. Of course, this is not, this session here is, my intention is not to like give you a strategy directly, okay, because again, I feel that what I'm using might not be suitable for everyone, okay, just plug and play like that, okay, but I think this webinar, this sharing here is super important to set the tone, okay, to give you that expectation, that mindset, become a trader. Okay, so again, I don't expect you to learn, or I would say absorb everything we talk about. Okay, if today you can actually take away one learning point from the sharing, I think wow already. Okay, okay, so I see some question over here. Okay, let me read out so that you know. Okay, and then from there I'll answer a question. Okay, so there's a question from Weikin asking, will you risk more than 2% on each trade? Okay. Okay, so very good question. Okay, the question on will I risk more than 2% each trade? Now, first off here, there's no right answer to that. Okay, you need to first understand what's your risk appetite. Okay, now honestly, I don't risk more than 1% per trade. Okay, but that's me. I'm a very conservative trader, right? I know traders who risk like 3%, 5%. Okay, if you're comfortable with that, okay, by all means, okay, because if today you are higher, or I would say you are a little bit more aggressive, okay, your risk profile is a bit higher, okay, then naturally your return will be higher, right? So I would say there's no right answer, but the guideline here is that if a trade that you're putting in, okay, affects your emotion, affects your daily activity, okay, you're risking too much. So for example, if today you put in a trade, you execute a trade, and then you can't do anything else, you can't sleep well at night, you can't enjoy your time doing other things, okay, you're always affected by that trade that you place it, you're risking too much. Okay, the guideline here is like, I actually shared this principle before. Okay, now if today you're walking on the street, right, and then let's say you drop $1, okay, somehow it fell off from your pocket, you drop $1, okay, and drop into the drain, can't pick it up. Okay, what will you do? Will you like cry, break down and cry because you drop $1 and you can't pick it up? Probably won't, right? You probably just okay move ahead, right? That's about it. $1, right? That's all. Okay, so I want you to have that idea when you're taking trades. Okay, always have that impression or that concept that every time you take a trade, it's just $1. Okay, which means that that trade shouldn't be affecting you at all. Okay, of course, this is where everyone is different depending on your relationship, your conversation with money. Okay, some of you, $1 can mean a lot, $10 can mean a lot, $100 can mean a lot. Some of you, maybe $1,000 to you is fine. Okay, again, there's no right or wrong. Okay, and this is not about looking down on people, right? This is just an internal conversation with yourself. You need to know what's your comfort level. Okay, so again, I hope helps. Okay, there's no answer to it. I can't say that 2% is wrong, 1% is right. Okay, there's no such thing. Okay, it all boils down to how comfortable you are. But essentially, a guideline here is that it should mean nothing to you. Okay, it should be so little that it's not affecting you at all. Okay, so I hope it helps. Calvin here has a question as well. Okay, do you think it's good to be a full-time trader? Now, I'm not sure. Again, a lot of people ask about or actually say they want to be a full-time trader, or like what it takes to be a full-time trader. Okay, but at the end of the day, I want you to know that full-time trader is not the same as like working full-time in the company. Okay, it's a total different thing, because the world of trading and investing is that you do not need to be like working 8 hours a day to be a trader. Okay, but of course today, if you want to work full-time in the company, you need to commit to like 8 hours a day, right? So the understanding of full-time here is more of like, maybe I would define it like that. A full-time trader is essentially having the source of income from trading and investing such that you do not need maybe rely on a job. Okay, so it becomes a full-time source of income, right? An income source that's able to support your livelihood. Okay, I would say that is the definition of perhaps a full-time trader. Okay, then if you ask me, with that definition, is it good? I would say yeah, right? Because you are truly independent. Okay, when I mean truly independent, you can look at 2020, right? When COVID hits, pandemic hits, a lot of business are affected, right? Some people even get retrenched, right? Some sectors are affected so badly, right? Especially like airline, tourism. Okay, a lot of people are retrenched. But if today you have the ability, you have the capacity to be a trader or investor, and then you have that income source coming in that's able to support your livelihood, okay, that to me is like a full-time trader or investor. Then you don't really need to worry about it, because you have that skill set, you have that capacity, capabilities, that no matter what happen out there, the financial market is always there. Okay, the opportunities is always there, right? You have like stock market, you have commodities, you have the currency market. So again, it doesn't matter if the stock market drop, because the currency market is still going to be there. The commodities market is still going to be there, right? So that's the beauty of it. Okay, and that's why I strongly believe that everyone should know how to trade and invest. But back to the question, is more of like, when are you ready? Are you ready to make it work for you, right? So that's the important element. Okay, so I hope that helps, right? Good question. Wei Kin says, I'm kind of weak on risk management. Okay, now risk management itself, okay, is actually a science. Okay, how to calculate your position sizing, your lot sizing, how much to go in, okay, the percentage that you want to risk in terms of capital. Those are math. Okay, you can calculate it. I think the challenge you are facing is more like the psychology element of it. Okay, now let's be frank, right? None of us like to lose. Okay, so when you cut loss, when the trade hits your stop loss, you don't feel good. Okay, even today I don't feel good. Okay, but you need, okay, for the better word, you need to get numb to losing. Okay, you need to say like, oh, okay, Lord, another losing trade. It's not gonna affect me. Okay, but of course you do not want to turn it into like your expectancy is negative and you don't care, right? Then that doesn't make sense. But you need to know that your expectancy, you have a winning strategy, but this journey here, you're gonna take losses. Okay, so you need to be okay and you need to get numb with it, right? You just say, oh, this is another losing trade, let's move on, because the next trade might be winning. As long as I follow my system, I have the discipline to cut loss, follow my entire strategy, I know I have a winning strategy, right? Based on statistics. Right? So I think the challenging part is really about the psychology aspect. Okay, and honestly, there's no shortcut to it. Okay, as a coach, I can teach you very easily technical analysis. I can teach you the strategy component. I can teach you how to calculate risk. Okay, but in terms of the psychology aspect of trading, it's not something that you can take away through a webinar, through a workshop. Okay, it's the process that it keeps developing. Okay, but I always say that the first step is to be aware of it. Okay, so if today you're aware of it, focus on that, right? And then become the better trader to manage your risk. Okay, that's the idea of it. Okay, hope it helps. Praveen here asks, okay, which broker is suitable for Malaysia? Now, I wouldn't say, again, I wouldn't want to like strongly recommend any broker here. I think there are quite a good number of brokers out there that are proper, that are legit, okay? But of course, Malaysia is a hub where there's no local brokers for currency that are kind of like top validated by SEC. Okay, but I think you just need to do a little bit of research, right? As long as the broker is reliable, there's no in historically, I think there's no issue about fund security, then it's fine. Okay. Hey, Pravin also asked like which software website that you use for TA technical analysis. Now, for me, I use a lot of TradingView. Okay, it's a charting platform that's free. I think it's very user friendly. Okay, just go over to tradingview.com. You can actually create a free account, go around it. I think that's the best charting platform right now. Okay, so that's the website that I use. Good. Last question I see over here is what will be the minimum investment for FX trader? Okay. The good thing about it is that for FX you can start as low as I would say about $300 to $500 you can start. Okay. With proper sizing, with proper risk management. Okay. But of course, again, $300 is not gonna make you full-time trader, right? You can't expect to have a full-time income with a $500 capital. Doesn't make sense, right? So it's a good starting point. Okay, but at the end of the day, it should be an amount that you're comfortable with. Okay, there's no right answer to this. It boils back down to your conversation with money, how comfortable you are with it. Some people are okay with 10,000 starting capital, okay, and they take it very seriously because it's a huge amount. Some actually start off with $300 to just explore, okay, and play around with it, okay, and of course from there, always add on if you're ready, okay, always top up the capital. Right answer. Good. Hey, so I hope it helps. Okay. Good questions there as well. Really thank you guys for actively participating. Okay. So good. Okay, that's all from me over here. Last part is to share with you that moving forward. Okay, this is what we're gonna do. Monday. Okay, so every Monday we'll have a session, something like this. Okay, next Monday we'll do more on like live market analysis. Okay, same timing at 9 p.m. Thursday we'll also have another one, but Thursday will be conducted in Chinese, okay, in Mandarin. Okay, more or less similar content, but it will be just in different language. Okay, and on Friday I'll also will do it on YouTube. Okay, on Friday I'll do it on my YouTube. Okay, at 9 p.m. What we do on Friday is basically walk you through my stocks portfolio. Right? I call it the stocks portfolio review. Just to share with you what are some of the trades, or I would say investment that I'm involved in, why I actually took those investment. Okay, the idea here is to give you a better understanding of approach, the process that I use to build up my stock portfolio. Right? So hope that helps. And hope you enjoy today's session. You benefited from it. Okay. do, okay, can let me know as well. We appreciate some form of feedback so I know how I can improve on it for future session. Okay, so with that, we'll end off today's session over here. And for those of you who like to join us on Thursday or Friday, okay, I'll see you guys then. If not, then I'll